Right now, I'm focusing on three themes. So one is the decarbonization of legacy industries, and there you have your utilities as the very obvious sector because they are the ones that are going to generate all the electricity that we're going to need in this new green future. They will be there, but they need to change the way they do business, decarbonize, move to renewables, and so on. The second one is companies that make things that make other parts of the economy decarbonize. So that's your obvious one is the wind turbines and so on, but you also have industrial gases, you have other types of tools where you facilitate that other companies can bring down their carbon emissions. And the third one, which is an up-and-coming one I would look very much at, is the biodiversity aspect. There's legislation coming now in the European Union, also on the way in the US and other countries, where importers are forced to look at where do their inputs come from. So it's commodities like timber, cocoa, chocolate, and so on. Palm oil, a very important one in Asia as well, where importers are going to have to look at, can they prove that this has been produced without deforestation? Can they prove that there is no, let's say, slave labor in the supply chain and so on? So these are issues that used to not be very material financially. They were from a moral point of view, but financially maybe not so much. Now that is becoming financially material. Now it's something that you have to look at, because if you are invested in companies that cannot live up to those demands from the Europeans and other places, then they simply will not be able to sell into the European Union and those other countries, and their profits will be hurt. So you don't want to own any of those companies. I think there aren't really any pure ESG players, if you mean companies that are scoring 100% on every single sustainability parameter. Actually, if you want to make a difference, if you want to have what we call real-world impact, then what you should be looking at is those companies in the legacy economy that have the biggest potential for bringing down their carbon emissions, for improving their human rights record, and so on. Already buying into those companies that are the greenest of the green today, you're not going to change much. Yes, you can polish your halo and have a good conscience, but really you want to try and be part of the change, and that's also where the profit is to be found. Well, they should, because if a company is not committed to gender and ethnic diversity, then they're not going to get the full spectrum of capabilities that are available to them. And also, if their labor relations are not good enough, then they will have issues attracting labor in a tight labor market where maybe specialized types of competence are hard to get. So that's another way that the social issues become important. And finally, there's the risk management issue, what I mentioned before about the supply chain due diligence. If a company is not able to prove that they don't have child labor and the like in their supply chain, they won't be able to sell into specific markets. If they're not able to sell into those markets, their sales will suffer, their profits will suffer, their stock price will suffer.